Welcome to Weekly View on Markets. This week, Nifty has closed at 17,314 and posted a gain of 1.29% for the week. I had maintained my view that Nifty will pull back from the support zone, and we have seen the Nifty price action posting again during this week. So I have maintained the same support and resistance lines on the chart, as there is not much change in the chart structure during this week. Nifty Midcap Index closed with a gain of 2.41%. Small Cap Index closed with a gain of 2.59%. Bank Nifty gained around 1.4% for this week. The bullish sentiment in the overall market and the broader markets, that is in the mid cap and small cap index, gives me a indication that undertone in the market is bullish. Our markets are dragged down by the global clues on certain days. Otherwise, the undertone of the market is bullish in the Indian markets. India weeks, that is the volatility index, is at 18.81. It is still at elevated levels compared to historical values of India weeks. So this indicates that volatility in the market is likely to continue in the coming week also. Huge intraday swings during the live market based on global clues makes it very difficult for short-term traders to take buy and sell decisions in the live market. So I suggest it is better to stay away till market gives a clear indication technically on the trend. If traders have to trade for the short term, they should follow strict risk management techniques with stop losses and follow the discipline. Otherwise, in the current market scenario, traders are likely to make losses. Let us talk about different sectors. This week, except FMCG and consumer durables, all other sectors have gained. So there was overall bullish price action in all sectors. The rally was led by media stocks, realty stocks, commodity stocks, and IT sector. The IT stocks, after 3-4 weeks of correction, have bounced back this week. Private banks have also gained about more than 2% during this week. PSU companies have posted a big gain of around 4%, and CPSE index has gone up by more than 4.2% during this week. Uh, We have seen profit booking in FMCG stocks and consumer durables. They were down by around 0.5 to 1%. So nothing to worry on that. It was just a profit booking. Now let us look at Nifty chart. This is daily chart of Nifty. I have retained the trend lines which I had drawn last week. There is not much change in the chart structure during this week. As expected last week, the market has bounced back from the support level, and now it has closed above 17,200 level. The first resistance is crossed during this week, and the closing is above this. So as long as market is able to maintain above 17,200, we'll see rally going up to around 17,600 to 17,700 level. So 17,700 level is the next resistance. So this week market is likely to trade in this range. And if we look at the Nifty chart, it has made a kind of double bottom formation at around 16,800 level. So as long as Nifty maintains above this double bottom level, I hold positive view on Nifty. This double bottom formation, as per technical theory, has a bullish implications on the price action. So I will take a review if Nifty breaks 16,800 level. Otherwise, my view for the next weeks continues to be positive. Nifty mid cap. Let us look at Nifty small cap and mid cap index. This is Nifty mid cap index daily chart, and it is above the support zone. Let us look at weekly chart. Weekly chart is also about the support zone. Now let us look at Nifty small cap index chart. This is the weekly chart which has just touched the resistance level. Let us look at daily chart. The daily chart is above the support level. So there is no any kind of bearish indication on this. Now let us look at some of the fundamentals of the market. If we look at the market valuation, Nifty valuation, we see that Nifty valuation has gone up comparing to a month ago. So even though there is no much change in the price levels of Nifty, the valuation has gone up because some Adani stocks, that is Adani Enterprise and Tata Consumer stocks have been added into Nifty, and some traditional stocks have been taken out. The stocks which have been removed had a lower PE value, and the stocks which have been added have a higher PE value. So, because of this, we are seeing the valuation of Nifty is at around 20.09 as of now. But if I consider 1 year forward PE of Nifty, assuming a earnings growth of 15%, the Nifty valuation is around 17. So the valuation looks quite fair. So investors can definitely look at investing at current levels of Nifty. If we look at price to book value of Nifty, that is the asset side valuation, the Nifty valuation is at 4.07. The Nifty price to book value historically is around 3.5 to 3.7. Why Nifty asset side valuation has gone up? The reason is that we have seen lot of asset light companies being inducted into Nifty. Stocks, what are the asset light companies? They have smaller asset base. fixed assets are less in those companies. They are the companies, e-commerce companies like Nykaa, Paytm, Zomato, IRCTC. So similarly, insurance companies like LIC, HDFC Life, so SBI Life, SBI Cards. So they all operate on a asset light model, unlike asset heavy model. Which are the companies having asset heavy models? They are like oil and gas, power generation companies, energy companies, automobile manufacturing companies. So these companies have huge plants, assets, machineries. So their price to book value is higher. So many asset light companies have come into Nifty composition. That is why we see Nifty valuation at a elevated level of 4.07. So with the change in the market scenario, we have to understand and should be able to evaluate the market levels with the new perspective, the, which is different from the old traditional perspective. So then only we will be able to understand the valuations in a fair manner. Now, quarterly results, that is Q2 results, are going to start from this week. IT companies are starting the result season. They will set the tone for the result season. So, IT companies' results and their margins are likely to be affected by the input cost pressures. Rupee has, INR has depreciated comparing to the, so that will give a positive impact on the results of the IT companies. And we have already seen that about 20 to 30% correction in IT stocks. So any surprise with good results and good commentary by management about future will result in a rally in the IT stock. So we'll see stock specific movement in the market based on the results in the coming week. India is on a cusp of growth cycle, earnings growth cycle for next 8 to 10 years. Investors have a big opportunity to make money from the stock market. They should have the capability to identify companies with strong fundamentals, strong balance sheets, which have a sustainable growth for next 8 to 10 years with underlying profitability and pricing power in the market. So if investors are able to identify these characteristics in the companies, and if they remain invested in such companies for next 8 to 10 years, I am sure they will get multi-bagger returns. Those investors who do not have capability to analyze the market and understand the complexities of the market, they should simply invest in mutual funds. These mutual funds are managed by expert fund managers, and also it is regulated by SEBI. Investors have opportunity to make very good returns from investing in mutual funds also. And I'm sure that Indian growth story is quite strong. And if we want to benefit from the India growth story, we have to remain invested either in equity markets directly or through mutual funds for next 8 to 10 years. This is all for this week, friends. We will meet next week again. So if you like this video, please share the video with your friends. You can subscribe to the channel, and also please give your feedbacks and write your comments. Thank you.